You tune into the Budget Special Show with me, Ankita Saxena, and with me is Snehi Shah. And together, we will take you through all that happened through the day and, of course, the lowdown for the budget. But let's go across to CS Setty, SBI Chairman, who's joining us to weigh in on the budget. Hello, Mr. Setty. Thank you so much for taking the time out and joining us today. Mr. Setty, tell us, is there enough disposable income left by the Finance Minister to really help the case for banks? Now, will it give a boost to the credit growth?
Yeah, definitely. In the sense that, the disposable income, the savings surplus would definitely increase, which will lead to, the deposit accretion, which we are all looking for now. The bank deposits would definitely increase, and it also spur the consumption. The consumption multiplier is almost 3 times. That is what our economic research indicates, that if surplus is X, the consumption multiplier would be 3X, right? So that is also another positive outcome of this reduction of taxation or increased limit on the exempted tax. The third thing is that it may also lead to some investment. Obviously, the saving surplus is now going both to the bank deposits as well as to the investments.
Good evening. This is Snehi also joining in. There are also announcements on the Kisan credit card limit enhancement to 5 lakh rupees now compared to 3 lakh rupees earlier. How are you assessing the impact of this measure that's been announced in the budget this time?
So KCC, we have a large portfolio of KCC. We are probably the largest KCC lending agency in the country. So far, the farmers, they were getting subvention, interest subvention up to 3 lakh rupees. Now in this budget it is increased to 5 lakhs. We have noticed that the cost of production has increased for them. So obviously the farmers will get benefited. Now they can avail a larger crop loan. Though they were eligible for a higher crop loan, they were not taking that limit fully. Now this 5 lakh, it not only helps the farmers to avail, a significantly larger crop loan amount, the banks also will, expand this credit to the agriculture sector.
Right. Mr. Setty, also tell us, with an increased government capex, do you expect any crowding out of effect on the private sector credit demand?
I don't think so. I think even now, both the government capex as well as private capital expenditure is been coexistent. In fact, we have been saying that the government has to spend more, and obviously the capex limit of 11.2, if you add the capex by the public sector enterprises and also the grants which the central government gives to the states for capital expenditure, it aggregates to around 19 lakh crores. So we are looking forward to this capital expenditure program to spur credit growth, and I don't think it will any crowding effect of crowding out on the private capital expenditure.
Okay, Mr. Setty, point taken. Also help us understand how SBI plans to leverage the budget's focus on rural development and MSMEs to expand your own portfolio. What's going to happen on this front?
So MSME, there are quite a few announcements in the budget which are very positive to MSME sector. One is the limits, both on the capital investment as well as on the turnover, which make them to qualify for micro and small and medium enterprises, have been revised, which means that some of these small entities which are technically micro entities now would properly be classified, and some of the medium enterprises which now currently classified as a corporate will come into the SME category. So they all get benefited because there are a lot of export incentives this SMEs are eligible for, and also the interest rate benefits which the banks pass on to the SMEs because they qualify for PSL. which will increase the credit flow to the SMEs because of this reclassification. That is number one. Number two, the credit guarantee cover is also increased from 5 crore to 10 crore. Today, there is a general shift what we are seeing among the banks, that we are moving from the collateralized lending to a guarantee based, cash flow based lending. I think that will further get a boost from the banking sector, because a lot of digital data is available now, GST data, income tax data. So we are using this data to create a model where cash flow assessment is done, and now the guarantee available up to 10 crore rupees will enable us to lend without asking for the collateral.
Right, Mr. Setty, there was another very important announcement that FM has also announced the FDI in insurance to be increased, from 75% earlier on to now 100%. Will this really give a boost to your insurance subsidiaries as well?
It's definitely a positive for the insurance sector. Even 74% FDI was attracting adequate attention from the global players. But there was always an apprehension that if they really want to increase the limit, would that be a constraint? But now that constraint is removed. If any global player would like to come and set shop in India with 100% ownership, that has been facilitated now. That's definitely a positive for the industry. For the existing players, even some of the players have foreign, partnership up to 74%. So that does not really make any difference. Any competition is positive for the industry, in my view. I think our subsidiaries are competent enough to handle this.
Okay, and lastly, Mr. Setty, after the announcements that we've heard from the government today in the union budget, we also have the monetary policy that's lined up for us next week. What do you make of the action that's expected in that meeting? Do you expect any rate cuts to be announced when the policy is discussed next week?
Even earlier also I was saying that the rate cut is a possibility, and our house view is that there would be definitely, a potential rate cut of 25 basis points.
All right, Mr. Setty, thank you so much for taking the time out and joining us.